Good afternoon.
You know, a couple months back, I was beginning to care less about what the Fed was doing because the markets just seemed to be ignoring the current interest rate environment and just climbing higher and higher. For some reason, this particular moment in which the Fed is positioned to talk tomorrow, Wednesday, at around 2:30 Eastern Standard Time, this is the best visual representation of what concerns me. He comes out of the back behind the curtain, steps up to the podium, and the market just flushes. I've got an interesting show for you guys today. We're going to be talking about some big tech stocks. I'm going to talk about a penny stock play that may be of interest to people. We've resurrected an old penny stock play back from the grave, but I'm going to give you guys some of the optimism as well as some of the concern I have regarding the idea of trading this at all. And I'm going to highlight some crypto. I've kind of got everything jam-packed in this one for you guys. This is the Stocks with Josh show. Hey guys, hit the like and subscribe if you need help interpreting and analyzing these hot markets. So the S&P slips ahead of the Fed rate decision. As I said, tomorrow he's going to speak around 2:30 Eastern time. And the question is, what type of signal is he going to give to the market? And here's what makes me nervous about this. Because the fact is that inflation, as I've said in recent videos, has begun to, at best, flatten out, no longer go down, and possibly even curl up. And so there is the chance that he might actually suggest that in this year that rate hikes could go higher. Now, I would say that there isn't a strong chance. Largely, I believe that he's going to simply maintain the rate and that it's going to do its job, and that later in the year we may see a cut. Possibly at the moment, I'm only seeing that it would occur in the fourth quarter after the election. But if in any way he hints to the idea that rate increases are not completely off the table right now, the market might find a hard time digesting that, because I want to remind you guys that the market currently has priced in 4 rate cuts this year still, which I also do not see. And so I think that the Fed's talk tomorrow is going to be front and center, extremely important, and the market's going to react to it. Now, how might the market react? Where are we at? Are we frothy? Are we overbought? Are we at the point where the markets are clearly telling us that the run-up may be over? Well, I'm going to say no to that. I think that the analysis of the S&P 500 suggests to me that the market is in a very tight compression pattern, still shooting higher. Now, the reason why I use the word tight is that when things begin to get a little bit more questionable, when the bulls and the bears begin to fight, you begin to see that price pattern begin to spread apart and get further away from each other until a decision is made and it goes one way or the other. At the moment, the price pattern is still very tight with just the least amount of pullback, and it's just still steadily climbing. The chart of the S&P 500 is incredibly bullish. It looks like a tight fume pattern from a rocket, climbing and climbing and climbing. Nothing at the moment seems to be out of order. But there are some signals that I need to bring to your guys' attention that do concern me and are signaling what I think is going to happen, which is that we are likely to get a 5 or 6% small pullback, a little correction, not even a big one. Because ultimately, at the moment, without any new data and without the Fed speaking, it appears to me that the market could climb as high as 5,500. That's the S&P 500 as measured by the SPX. But I think tomorrow the Fed could talk and we could get a micro correction of 5 or 6%. That's very possible. It wouldn't mean that the run-up is over and then we could continue higher. You say, well, Josh, where did you come up with that? Well, there's a couple things that I looked at. One, if we go back in time and we look at the last peak that the S&P 500 made, it did something very similar when it got to its very top. It had a little 6% correction and then a final 12% move up. If we did something similar right now at this spot, we got a little 6% correction, we'd be coming back to around 4,900, and then we would have the opportunity to do that final push up to 5,500, and that would be sometime in July, mid or end July. And then at that point, going into sort of the latter half of the year, things would become a little bit more unstable. It doesn't mean that we would have a hard capitulation. It just simply means that the price action would cease being tight and up and begin to be wide, and things would begin to look like distribution. Distribution is when the smart money begins to take profits more aggressively. Two things in the S&P 500 I want you to look at on the chart, and that's extreme bearish divergence in the RSI, which means that the momentum to the upside has been cooling for a long time, even though the price is continually climbing higher. When you see that divergence between the two, for the most bullish scenario to be in play, you want to see price and momentum pushing higher. Right now in the S&P 500, only the price is pushing higher while the momentum is going down, and it's clear in the charts. That's why we look at the charts. The other thing that concerns me is how we've moved away from moving averages. Because the market's been so strong, the price action has gotten away from moving averages, right? And I'll tell you guys, the moving average number, which is the average price over the course of time, the price likes to come back to it. It's like a magnet. So when it gets away from it, it wants to come back and test it. Now, if the market remains bullish, it'll come back and test it and bounce higher. When we look at the 20 EMA on the daily time frame, it's come back and tested it many times. At the moment, we've moved away from it. We've got bearish divergence. If the Fed talks tomorrow and says something crazy, then we could expect a 6% correction, but I don't believe that that would be the beginning of the end. I think we still have at least 12% up from this point when we pull back. So maybe you could say 6% up from where we're at right now. But those are rough numbers from just looking at the charts earlier. I'm going to dive into Tesla here in a minute, as well as some pennies and crypto stocks, cryptos that you need to be looking at. But before I do, I also wanted to take a quick station break for the MOOMOO investment app. If you are just getting going in your trading and you need better trade tools and you don't like to work with some of the limitations on the current platform that you're using, I would suggest the MOOMOO investment app. If you simply put money on the app, they're giving away 8.1% interest rate, which means you don't have to invest in anything. You can just make 8.1% every single month. They'll give it to you for 3 months, and then they drop it down to 5.1%. Plus, you can get up to 15 free stock. I'll leave a link in the top pinned comment. All right, I'm going to go into some stocks now. Let's talk real quick about Verb. I cannot believe that the word Verb is coming out of my mouth on this show again. Sometime a year ago, we were trading Verb, and I was excited about Verb. In my opinion, Verb had some software uniqueness in the space of online sales that differentiated them from other similar companies. But between the manager basically overspending, small things, small signals of why I didn't like Verb's management team. When the company was not anywhere near making profit and they were constantly diluting their shares, the manager had paid himself, I think it was around $2.5 million. And for a company of that size, it seemed to be an exorbitant salary. And in past experience, when I've seen things like that, it's a bearish sign. It means that the manager knows that the company's in trouble, that his reputation could be tarnished, and so they've got to up his salary to incentivize him to lead the company. That's one of the things I've seen. I think they've had issue with overspending, trying to excuse, trying to get unorganic growth, trying to buy growth, which is somewhat normal, but when you do it too much and you don't rely on building a strong sales team, well, then you're in trouble. I'm not here to beat up Verb, but I will say not too long ago, they got a deal with TikTok. And I thought, man, this could be a turning point. But it really just turned out to be a blimp up in the price. And then quickly they continued on in a downward trend. They need to be showing Wall Street revenue, not new relationships. Show us money made. Well, in the course of time now, they've got another big deal with Meta. And it still brings us to the idea that somebody could buy this company. That was the best outcome of Verb that I saw in the past. Now, we've come up. I like what I see in the recent price action, and I'm willing to give the company another bit of benefit of the doubt with this positive news story that we haven't seen as much price movement up because of the bullishness of this news story. So it didn't quite peak. I think there's the opportunity for it to get up to $1.50, maybe $1.48. And so there is a little bit of opportunity here. But I would tell you guys that it's kind of like somebody stuck in quicksand, and they're slowly going down. But in their pocket, they've got some diamonds. And you've got to somehow reach in there and try to grab them by the hand and pull them out. And if you are successful, then you guys can share the diamonds. This is a silly analogy. If you're unsuccessful, you fall in the quicksand and you lose everything, and they lose everything, and nobody wins. I would tell you that Verb is sketchy. I got into it. I used a stop loss. I got kicked out. Watching it again, it's at least interesting, and I thought I would share the story with you because it's one that we've covered in the past. The last time I had a big investment in Verb, a year ago or more, I was lucky that because of a short squeeze, I got out with a $4,000 profit, and I knew when it popped up, I thought this thing is gonna drop hard. And so I warned people. I said, sell, 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 sell. I'm taking profit. I even called a friend who had some, and I said, hey, bud, I'm selling right now. And he didn't sell, and he lost a ton of money. And he's like, well, I think you can get two pennies higher. I'm not blaming him. I've done the exact same thing. I did it recently in a crypto trade, something I was looking for it to get up to 116, and it only went up to 114, and then it failed. And I thought, well, what did I do wrong? I went back and looked at my lines, and I realized that I had drawn them incorrectly. If I adjusted them correctly and zoomed in where I should have, it would have landed on 114. And when it was 114, I would have known to have sold. Verb, we were lucky to get out of it. I've told everybody it's dead to me, but they've done it again. They've reappeared in my world with this deal with Meta. And so we're going to give it a little bit of a chance to see what might come of it. At bare minimum, just keep an eye on it. Let's see what it does. All right, Tesla. I'm going to keep my analysis of Tesla very, very simple. But right now, the entire EV space is not doing well. And until the Fed comes out and says he's going to lower interest rates, or he actually lowers interest rates, which people are thinking, I'm thinking at the end of the year, the EVs will begin to turn around 6 months before that happens. And so it's very possible that June or July, we might see the EVs come back. And that brings me to what I think is happening with Tesla. I want you guys to have these clear technicals from me. 177.30 is the resistance to this little bit of a bullish move we have up. For me, there's not enough volume or momentum to suggest that Tesla has reversed and is on its journey higher. So not enough volume to suggest to me that we have had a full bottom made, or that we've come back and made the bottom. So what I'll be watching for is 177. If we come up there and we hit that and we get rejected, I would believe that we would come all the way back to where I've said that we would go into the 150s. But because these are moving averages, that price has changed. The last time I gave it to you, I said 156. I've now adjusted it specifically to be 154.30 is the area that I'm going to be watching if we do get a failure beneath 177. Now, there is one exception to this idea that I've laid out before you, and it's sort of a melt-up theory. It's kind of rare. It's where I've seen stocks reverse, but with no significant or beautiful volume candles or momentum. They just simply begin a slow journey of turning around, and then out of the blue, you'll get a monumental green high volume momentum candle, and typically it'll occur at a resistance point. Well, I'm willing to keep an eye out for that, but we've had no reversal signal on Tesla, and if we get a rejection at 177, then it would tell me that we're going back below 160, and that's where I think it's going to be going. I want you guys to be prepared. I'm bullish on Tesla overall. If we get interest rate cuts at the end of the year in the fourth quarter, sometime in June would make sense to me for people to begin to buy it up in anticipation of them beginning to turn things around. That's how I view it. I'd love to hear from you guys. It's reasonable at these levels to be nibbling at Tesla if you believe in it as a long-term investment. You're definitely not buying the top of the range. You're buying an area that if we get back up to 300 sometime in the next 12 months, then you will have been thrilled at every single purchase in this price zone. Just my thoughts, not a suggestion for you to buy, sell, or hold. I am hedging my long positions in shares with puts. And I've been taking positions and getting out of them. I got out of one the other day. I'm going to be looking to increase my put position at 177. That's the game plan. Now, let's briefly touch about crypto because I didn't even want to fit it in. Like I have enough to talk about, but I had to come out and shout out a couple cryptos that I have been bringing to your attention that are performing really well today on an ugly, ugly weekend and an ugly, ugly start of the week. SEI and SUI. These two cryptos I've been highlighting recently. They're around 2 billion in market cap, and I believe that they could grow significantly. They've not had their run-up or parabolic moment, and today they're up in a sea of red crypto. So I'm going to highlight them again, and I'm going to clown a little bit on XRP. And you know, I'm probably going to get some heat for this, but you know, XRP, so my son says to me, hey, XRP is doing pretty good. I'm like, oh, really? What's it doing? He's like, well, it's just down a little bit. I'm like, man, I was like, how low have we fallen that we consider, you know, that we are bullish on XRP when it's just down a little bit? You know, I mean, there is so many crazy theories out there regarding XRP that the price is being suppressed secretly by the US government and because they're going to roll it out as the new US digital dollar. And I just want to say that it's fine if you want to take a speculative hold on XRP. It's significantly underperforming. There's no later date. There's no moment in which it's going to take off. Wall Street is not interested right now in XRP. That's why they're not buying it. There's nothing more complicated about it. You know, I have owned it. I recently sold my bag, which for me is no big deal. If I miss out, well then, and you guys are right that XRP is going to the moon and it's going to $100. If I miss out, well then I'll be the one to come back right away and said I had it all wrong. I held XRP for a long time when the recent, when here in the last year, when the positive judgment came out regarding its case with the SEC and it didn't hit a minimum of $2, you know, I held, right? And I'm like, okay, well, you know, I'm going to hold. But it's time, I'm telling you, it's time for me to begin to clown on XRP. My son triggered me with that comment that XRP wasn't doing that bad today. XRP is doing terrible. The charts are terrible, and I don't see any signs of life. If you're XRP Army and you think I'm dead wrong, don't say I'm wrong in the text comment section. Tell me why. And I'm not talking secret conspiracy. Tell me what you see in the chart, because I'm a chart guy. Speak my language. Tell me what you see in the charts that should suggest to me that secretly this thing is being bought when volume is low and the price action is down. So there's just a couple thoughts. I'll leave it there. Try to be positive. I hope you guys are having a great day. And I'd love to hear from you in the comment section. Just say hi and throw a heart in there and hit that like. If you made it this far, you probably enjoyed the video. And I've got more crypto videos. I would have made today an entire crypto video, but I thought I better talk about stocks and the S&P 500 people. My stock people are just going to think I've abandoned them. But we will be back on some crypto because there's money being made there. Right now, accounts are bleeding, but this is a moment to reorganize. All right, guys. Thanks for following along today. Appreciate each of you. Peace and blessings. Take care.